Welcome, guys, to another episode of the YVR REMO show. You've got your host here, Alex McFadden. Today, I have Ian Tucker of G&V Insurance, a property insurance expert, coming on. And don't worry, we made sure that this is an interesting one. Ian has an accent, so you'll all enjoy listening to him talk about property insurance. But joking aside, we had some big questions and concerns come up nationwide and worldwide as it pertained to Strata Insurance earlier this year. And it kind of got swept under the rug when COVID happened. But Ian has some updates for us today on where we stand, what to look out for if you're buying Strata, if you should even consider purchasing Strata, and what that impact will be on real estate, investors, and so forth. You're going to really enjoy this episode. I think you're going to learn a lot. I know I did. If you guys are liking the show, please subscribe, share it with a friend, let us know, send us some feedback. We'd love to hear it from you. Have an amazing, amazing day. Enjoy the show, and we'll talk to you soon. What's up, guys? You are listening to the YVR REMO show, where we talk all things Vancouver real estate and mortgages, take boring topics and make them interesting. Make sure to stay tuned to listen to everything you need to know how to put cash back in your pocket, create wealth in real estate, and simplify the complicated. All right, Ian, the broker in Abbotsford, thanks for coming on the show today, my man. Good conversation to start the thing off. So if for everybody listening here, we got Mr. Ian, Sir Ian, joining us today of a company which we cannot pronounce. So we're just gonna call him Ian of Abbotsford. Ian's an awesome guy. We've had the chance to get to know over the course of, wow, I feel it's only been a little while, like 4 to 6 months. It was right before COVID. We got introduced to each other, and we hit it off really well. Right. We met actually on an investor bus tour, which was really fun. What a unique experience that was. Have you ever done that before, by the way?
I haven't. No, Ben mentioned it to me a few times, and no, I haven't. But it was pretty good, and I think there was some good characters there that learned a lot. It was good, especially listening to you guys. It was definitely worth their while, I think.
Yeah, and then so basically, for anybody listening, we basically two of our partners, agents that we work with out in the Abbotsford area, took about 14 to 16 clients who wanted to learn how to invest in real estate, and then Derek and I have the Thrive team, along with Ian, and we went to I think 6 or 7 potential investment properties with pro formas, with everything prepared, so we could actually visually see it, which was super cool. But we got the chance to meet Ian, and that's why we're here today. Ian has been in insurance for a number of years, and we found him to be very, very informative. And so, with back in February when we had that investor bus tour, there was a lot happening at the time, and there was a lot of noise in the marketplace around Strata Insurance and so forth. It kind of fell to the back burner once we hit this COVID circumstances situation, but it's kind of reared its head again with people buying in the market and with the government getting some intervention. So we thought it'd be a perfect time bring you on, my friend, to talk about what's happening, what's there, and talk about some other items.
Yeah, sounds great. Thank you very much for having me.
Perfect. So, basically, like, where we want to start off right now is we want to just jump right into it and get into where we're at. And maybe can you give us almost like a Cole's Notes rundown of what we learned back in February to today, just to where we are at, and we can kind of walk through it, and then we can jump into what's going on today.
Okay. Yeah. So generally, just talking about the impact on Strata Insurance. A lot of it came out in the press, and there's obviously been some pretty big events worldwide which have taken a bit of press time away from it, but it's still present and still a problem. And generally what it means is if you're living in a strata building, which I think there's roughly 1.5 million people in BC living in a strata building, you're seeing your insurance premiums go up, and it's drastic. I think the increase has been between 40 and 300% increases on the renewal for the strata building itself. So yeah, lots of reasons that's happening. It's we're in a hard market insurance wise, and a lot of insurance companies have just decided it's not been a profitable venture for them, and they're pulling out, which is making it hard to find coverage. And those agreeing to still insure these kind of buildings are asking for a lot of money and big changes, which is impacting strata unit owners, condo owners. And this is I think a good opportunity to educate people about what to look out for and how it's going to impact them.
Correct me if I'm wrong here, but there's only a handful of insurance companies that can really handle the massive monster insurance policies, correct? Like these 40, $60 million policies. It's fairly limited.
It is. I mean, it's basically been run by what's called program business. So they're not even insurance companies. They're fronts for insurance companies. Like typically a building, as you mentioned, which is, $60 million to rebuild. I mean, some of these buildings can be huge. Have, maybe like 10 or 15 insurance companies backing them, taking a small piece, because no one wants to be in that situation. You insure a building at 60 million, that goes down. That's too much money to lose, right? So, and especially what we're in is a hard market. So people are more risk adverse. So maybe if they were willing to insure a building for 30 million, now they'd only do 10 million. So that's where there are, prominent companies that deal with this, but they're finding it tricky to insure these buildings for sure.
And hard market, what do you mean by that?
So hard market, every market, insurance market has its cycles, and we've probably been in the worst market for the last 20, 30 years. It generally means that there's lack of supply. So yeah, if you've got a building which is 1 million to replace, then it's not too hard to find insurance, and people who will back you to do that. But when it's 60 million, there's just limited supply out there of companies willing to insure these types of buildings, and they'll charge a huge amount to do so. So rates have increased. Beginning of the year, we had fires in Australia. There's constantly events happening around the world which are basically causing huge insurance losses, and we think of ourselves as like, hey, we just live in the lower mainland, but actually, insurance prices are affected globally. So these big events have an effect on all of us. And strata buildings particularly have been having a lot of small claims, water claims, things like that, which have just meant they're not being profitable for insurance companies to insure.
That's what I was going to say, is this isn't just a local, Fraser Valley or even BC problem. It is worldwide. But, given that maybe the values in Vancouver are so dramatically high, like you're going to see more strata issues where we live compared to maybe in Alberta or Saskatchewan because of the values of the buildings. Is that right?
Yeah, in part the values. I mean, it's not always the real estate. It's the rebuild cost is what the insurance factor. So that's one factor, but also we're in an earthquake zone as well. So that's the other issue for us particularly, is that, yeah, you've got to also factor that in, that there's the earthquake risk as well, which we have.
So in the Vancouver area, would you say that we're in a unique situation in Vancouver, unlike most of the rest of the country, in regards to what you just mentioned, total cost of the building, in addition to that earthquake zone, or is it relatively comparable and those are just slight adjustments?
Yeah, I'd say it's relatively comparable. I think that the same thing's been happening across Canada in terms of the condo market of what's happening here. But yeah, we have the added factor of the earthquake is definitely puts off certain people who just don't want to take on that risk, because it is, obviously severe risk if it does happen.
Have we already seen builders and contractors of these types of companies, the large developers, I should say, make changes or shift the way that they are developing these buildings due to these insurance increases? Have you noticed or seen that yet, or has there been talk of that?
I haven't yet. I mean, that's the problem, and I don't know there's so many developments going up constantly, and I'm not sure what the impact. I mean, yeah, we haven't seen that many changes, and I don't know what we're going to move forward with the government things. I haven't distinctly seen anything that they're changing at this point. I mean, obviously, strata fees are going to be impacted because the costs of the insurance is higher. But I haven't seen any real changes at this point. I think the government's probably going to dictate that there has to be some in certain levels to try and moderate things. But I haven't seen at this point any changes on that side of things.
I guess what we really want to know is for people who are purchasing investment properties or real estate for themselves in the Vancouver area or outside the Vancouver region, in British Columbia as a whole, what should we expect going forward? Would you consider this to be kind of a new normal, and we'll see strata fees, just generally speaking, always a little bit heightened? Or is there going to be a dramatic shift and it's going to take some time to impact people? I mean, I get asked all the time from especially first-time buyers and the investment crew that looks at purchasing condominiums and so forth for themselves or for their investments. Hey, is this a bad idea? Should I be concerned that my strata fees are going to go up $100, $200, $300 overnight? Is it going to impact the cost of my investment? And while I know you can't necessarily speak to the actual value of the property per se, What are your thoughts on if we're going to see these increases continue over the next few years? And I guess as a second question follow-up to that would be, how dramatic do you think it will be?
I think my thoughts of how long this is going to go on for, a little bit unknown. There's been other parts of the insurance market which have been hitting bad times, I would say, since probably getting close to 18 months. And as I say, it is a market cycle. Now, maybe there's either going to be, I don't know what the government can do really, in all honesty, because they don't have the pockets to insure these things, So there's limited factors what they do, but maybe, the pricing's changed. Maybe in a few years' time, more insurance companies will actually come on board and see an opportunity to, the market's going to open up. But I guess it's a little bit with you guys at the moment. Interest rates are low, and it's a market cycle, and there's various factors which lead to that, which you know a lot better than I do about that. But there'll be a time, I'm sure, interest rates won't always be low, and I think that will be the same with the insurance market. Conditions we're seeing will at some point change and stabilize. I'd say we've got to be close to the bottom of the market. I would say, I'm hoping, I really hope, in terms of how bad it's getting. And so the good thing with that is if you've got potential buyers, when they're getting their buying the properties and they're looking at the insurance policies, you can generally tell if it's been impacted by the changes, and if it's renewed in the last sort of 6 months, 8 months, you probably know, hey, we know what we're in for a little bit. If the policy hasn't renewed yet, that's one thing you want to look at. If it's an August renewal on the building and the deductibles for water are still $10,000, you can probably say, well, it hasn't had the impact. And if you're purchasing that place, I would probably want to see what's going to happen there, because there's a high chance if that premium is going to go up 40 or 100%, then you're going to see that allocated cost to you and your strata fees. And so what you're budgeting as an investment property is going to change, right? So, but if a policy just renewed in March and you know what you're up against, then I think you're still good to buy, basically.
And these are annual policies, right? Every year they renew?
Yeah, 12-month policies, yeah.
Yeah, I've had a couple clients buying strata properties, and the existing strata payments were reasonable, and there was an upcoming insurance policy renewal, but they already had it done and it was set, and they knew that their strata fees were going to be going up for the next 12 months, and it was like a $200 difference. So that actually made one of the clients walk away. And how it was explained to another one of our clients was that it's going to be like this for a year, and after that they're expecting that these insurance companies are going to be earning a lot more profit, because a lot of this does tie into the profitability of the insurance company. So this was explained to them, and this could be totally wrong, but it was explained to them that the increased strata fees and the increased insurance policies are going to make these companies much more profitable to a level where hopefully after this year, or maybe it's 2 years or maybe it's 3 years, everything can get back to a normal. And of course it's building dependent, but what are your thoughts on that?
I think to a level that is correct. I mean, it's got to, as you say, every line of insurance, whatever you're insuring, you want to have a strong underwriting profit. Now, most people think insurance companies make huge amounts of money, and I'm not saying some don't, but I used to work for one, and basically we would aim for a combined ratio of 97%, which means that for every dollar of premium we take after we pay claims and pay all our costs, we're walking away with that margin. So that's a 3% margin, and that's a good year. That's what they aim for. So if you think about that, and when you're running these strata programs, they're probably going negative. They're probably, for every dollar you take a premium, they were probably paying out 40 cents, when you average it out. And that's where, and so you basically, if you can make it profitable, as you say, the premiums have gone up, then hopefully it will adjust. Now, maybe they'll come down a little bit, but maybe they'll be saying, hey, at these margins, at these crazy prices, it works for us. Maybe it'll encourage more people to come in, more insurance companies to be like, yeah, we want to be involved with this. It's going to make money. And it's,
I mean,
more supply, basically. Yeah.
A lot of what I've taken from what you said there, as far as today is concerned, whether it's a first-time buyer, downsizer, or investor, whatever that situation is, and they are looking to get into the strata market, is the primary consideration that they should be looking at there is whether or not the insurance has been renewed and what the impact is on the cost, because at least they know at this point, what you're dealing with. Is that fair to say? Exactly.
And the other thing, it's that it gives you a better broader view. And the other thing is you want to look at is it's important, and you guys do it, anytime that I've dealt with you, is that, you make sure your clients let me see the strata policy and we can look at the deductibles, because that's also going to incur a cost for them. That if you're got to insure your unit, and if the deductibles we're seeing used to be $5,000, now they're $100,000, which you as a unit owner can be assessed. that's going to cost you more money as well. So that's, for investors, that's a budgeting factor as well, that, what your insurance costs are going to be. And all of this is, is meant that it's costing the buyer, the unit owner, a lot more money as well, not just in strata fees, but in their own insurance, because the onus is being put from the strata building policy to the owner by these huge deductibles, mean that, it's not covered under the building, it's covered under your policy. So that's another thing it's important to look at, what those costs are going to be.
Can you do a quick once over of the differences between the strata, like the building policy, and your internal policy?
Yeah. So basically, if you buy, Derek, you're buying a condo, you own a condo, you have coverage for your contents. So say if you have $50,000 for all your contents in there, and then you've basically got coverage for what will happen. Say, for example, if the dishwasher overflows, now it might damage some of your contents, which you need coverage for, but also it's going to seep down maybe to the unit below you and damage the structure. That's going to trigger, that's the building, that's not you, that's the building's been damaged. And so the building policy has to respond. Your coverage really is only within your unit, it's your contents and things like that. But once it gets to the actual structure of the building, that's the main strata policy that would defend that.
So so let's say like your insurance, the strata insurance policy is with Hub, and your internal insurance policy is with Westland. How are they diving into that and deciding who's covering what? Is it pretty clear cut?
It's generally pretty clear cut. It'll be decided pretty quickly, and there'll be a claims adjuster, probably who might be a neutral third party anyhow. But yeah, that would be relatively clear cut. So once it damages anything which is structural, or the floors or anything like that, it's going to fall under the strata policy.
And do you have to have contents? What if somebody said they didn't care about any other stuff?
The reason to have contents coverage is because these policies come as a package. They also normally the protection they give you against the strata policy is multiples of your contents limit. And with these huge high limits of deductibles and everything we're seeing on the strata policy, it's it's helpful to have contents coverage, because it then builds you up a limit to protect you. Back in the day, 10,000 coverage would be fine. But now that's not going to give you enough protection if you're assessed to pay water damage to the building. So that's a factor. But also most companies start at about 30,000 coverage anyhow. So they don't really go much lower than that.
To take a little backstep there, I mean, there was one topic that you covered a few questions ago, and it was regards to reviewing the strata policy before making a decision to move forward on an actual property itself.
Yeah.
So just so anybody who's listening knows, when we're working with a client and they have a subject to financing, we actually get Ian, if they allow us to, which most people do, and Ian does a phenomenal job to review their financing policy, of which he looks at the actual policy and exactly what that insurance would look like, and provide some information to the client, assuming they want it. And this is something I think is under appreciated and underlooked in a lot of circumstances, because again, going back to your circumstance that you looked at, if a building is underinsured or it has some issues which would cost an inflation insurance in the next 6 to 12 months, I think you would want to know those things, as we discussed previously. So just a quick little point: if you are purchasing a property, make sure during that subject timeline you have someone like an Ian, and if you'd like to reach out to him, he'll have his contact information there to review that policy ahead of time. Is that fair to say there, Ian?
Yeah, I definitely think in today's world with what's happening, it would be crazy not to. You've really got to see what you're exposing yourself to and the impact it's going to have.
So have you seen this leak into other types of buildings, like commercial buildings? Are we seeing this in the detached market, or is this mostly confined to strata?
It is. It's in a lot of other markets as well. Basically, strata, because they're so huge, they're actually deemed as commercial policies. And now that would be the same. If you had an apartment building, which is residential occupied, you'd be probably seeing a 30% increase in your renewal this year on average. Anything which has residential occupancy, which means people are living there, is been hit worse, because obviously there's all the water issues of you've got a dishwasher, you've got a washing machine, you've got a shower, there's various things that can go wrong, and that's where they're seeing lots of losses. But generally speaking, across the board, in our office we insure some pubs, and liquor liability for about 18 months now has been crazy. It's doubled in price. So it's basically across the board, and detached homes are seeing an increase. It's probably not to the same extent, but it definitely, there is an increase across the board. I say it's the hard market is an insurance hard market that we're in, and that covers every line of business, whatever it might be.
With having come through COVID here, we're seeing a lot of people stay locally within the province to do a lot of traveling. And I'm hearing a lot of people who are purchasing and looking at purchasing second homes, vacation properties, these types of things. And additionally speaking, just like interested in buying investments with a rental component. So why don't we start on that Airbnb situation? Can you tell us a little bit about insuring a property that is likely to be a short-term rental? Like, what are the impacts of the insurance? Do you find that people, first of all, disclose it, don't disclose it, and if they do, is there a different insurance policy for those homeowners?
Yeah, I mean, I guess if they are, it's now, because it's widely known, it's always comes up as a question on any homeowner application. So if you're buying a seasonal, then it's going to be, you know, are you renting this in some capacity? And there's limited amount of companies who will insure. So your typical home insurance companies, I think there's only like probably one or two, maybe three, who will do Airbnb seasonals, or even short-term rentals if they're not seasonal. Say if you have a condo in Vancouver and you decide to Airbnb it, you're looking at getting, you know, your standard insurance markets would probably, a lot of them wouldn't go for it. But there are options, and I have quite a few clients who are doing exactly that. They're buying seasonals and they rent it out Airbnb, whether it's, you know, Cultus Lake or somewhere in the interior or Whistler, that kind of thing. There are options. But yeah, you just have to look at it slightly differently. And with those, you also want to, you know, you want to make sure you're getting your rental income coverage as well. That if, you know, if you've got somewhere in the interior and there's a wildfire and you lose your place, then you're relying on that income. If you've looked at it as an Airbnb investment, you want to make sure you've got lots of rental income as well, if you were ever to, you know, lose your property due to something like that.
So in a different scenario, what about somebody buying, say, a condo, they live in it for a year, so it's owner occupied insurance, and then they decide that they're going to refinance or they're going to buy their next property, move into it, but they're going to rent out the first property that they bought. What would happen if somebody didn't change that to rental insurance or tenants insurance and there was an issue? Would they not be covered? Like, is that very important that it gets switched over?
Yeah, I mean, generally, as all policies have, they're called statutory declarations, and one of those is, you know, obviously any known material change needs to be notified to the insurance company within, I think it's 30 or 60 days. So yeah, if you've moved out of that property, how they insure a rental property compared to a home, your actual home, is very different, because naturally, you know, tenants,
there's more risk, right?
Yeah, exactly. So yeah, generally speaking, it should be notified, you know, fairly quickly.
And you got the insurance company has well, I don't know if it's a right, but they typically do inform the lender. Is that correct? If there's a mortgage on that property, you guys would typically notify them of any insurance changes as well?
Yeah, typically there's a 30 standard mortgage clause on each policy if there is a mortgage, and that 30-day notice of cancellation. So that's the key thing, that if you aren't paying your insurance premiums, the mortgage company knows that, you know. And quite often on, you know, if they're refinancing, we'll be asked to provide a binder of insurance, and at that point they'll see the policy. If you're making changes like changing it to a rental, I don't know how clear they would, unless they really looked into it, would see it. But yeah, I mean, definitely if you don't have insurance on a property, that's when the lender will find out, because it's part of the agreement.
Perfect. Yeah, that's quite interesting, as far as, you know, just making sure that people, I don't think it's something that people didn't know, but I think a lot of people forget about the importance of making that transfer over. I didn't know about the loss of income on the rental policy as a key part of it. And I imagine that's optional to choose that.
Yeah, it is optional. I mean, yeah, depending what sort of policy form you have, but yeah, you do want to be looking for that if you're Airbnb. You know, if you've got an Airbnb or something along those lines, then that's just make sure you're adequately getting your rental income returned if something happens. Yeah.
No question. Well, you clearly know your stuff, man. Thanks for coming down and doing this. We really appreciate it, or hopping online. You know, insurance is something I don't think we talk about enough. You know, it's not the sexy thing. I mean, you know, but this is really helpful. So, like, just knowing the fact that, you know, these issues that are occurring they're worldwide. There is government intervention. We don't know what that looks like yet, so we'll probably have it come on when we figure out what that actually does look like. and then just
Yeah.
some solid quick explanations and tips as far as the different types of insurance policies. Ian, thank you so much for coming on, my man. We really appreciate it. Any parting words from your end?
Well, yeah, no, thank you very much for having me. One day we'll be in person having a beer, hopefully, but this is a good start.
Very soon, my friend. Very soon. Thanks again. We'll talk to you soon,
man.
Ian.
Ian
Okay,
from
cheers.
Abbotsford.